Hi all and welcome back to the ICIS Energy Foresight Podcast. It's the first episode of 2024 and for that we have a special guest, Mikkel Kring from Our New Energy. Hi Mikkel, how are you? Good to see you again.
Thank you. Good to see you, Matteo, and Happy New Year. And great
Happy
to
New
be on
Year.
this podcast. I'm doing well. Good break when skiing in Norway, and now back to conquer 2024.
Superb. And thanks for joining us to talk about PPAs. I know that Our New Energy is a leading market advisory company in that space. Can you help us understand a bit more what PPAs are and what's the future of renewables in Europe related to PPAs?
Sure. So, as Our New Energy, we are advising investors and developers across Europe on understanding the power market and managing their risks. Specifically, we've been focusing a lot on assisting them in executing power purchase agreement, long-term 10-year fixed price agreement with either utilities or end consumers, corporate PPAs. And since we founded the company back in 2016, we've executed more than 5 gigawatts of PPAs across Europe, from our offices in Denmark, Spain, Italy, Germany, Poland, and Australia. And we see PPAs as, let's say, a key building block in the energy transition, because basically a PPA seeks to allocate electricity price risk between the different players in the market. Either the risk stays with equity, the investor, it goes to the corporate end consumer, it goes to the utility or somewhere else. But of course, these risks needs to be allocated, and our efforts really comes down to finding the optimal allocation of this risk to make the projects as efficient as possible, keeping LCOE down, and facilitating this energy transition that we are also keen on fast forwarding.
Super interesting. And PPAs effectively are a way to move away from subsidies to actually let the market do its job and make players develop and consume renewable energies. And I think that we've seen a big uptake after over the past 2 years after the Russia invaded Ukraine and the price of electricity went to the roof. Is that still the case?
Yes, very much so. So the war in Ukraine, of course, imposed a lot of volatility in the power market, and what the consequences of that were many, but a few of them that has particular relevance for the PPA market was, of course, that when volatility increases, the risk also increases. So for utilities who inherently, when they do a PPA, are taking risk, their risk margins increased, and therefore their PPA prices decreased. Whereas on the other side, actually, from a corporate offtake perspective, well, they are consumers of electricity, and as the volatility in the electricity market increased, that risk perception from the corporates also increased. So actually, they have now a even bigger incentive to shield against this risk. So actually, we've seen an increased risk appetite and an increased appetite from corporates in entering PPAs. So it's clear that while there's been a steady growth trajectory on corporate PPAs over the past year, we expect this to accelerate even further in the future, because corporates, they do PPAs for, as we see it, overall 3 things. They would like it as a part of their green ambitions of their CSR or ESG efforts. They would like it to manage their risks, so as a risk mitigating tool, so fixed prices. And then thirdly, they would like to do a good deal. So they also look at, well, how much have they paid historically for power? What are the forecasted electricity prices? And in that context, does it look like being a good deal? So those are sort of the three elements that we really see corporates applying when they evaluate PPAs. And it's clear that in particular, this middle element of the risk, well, that has boosted, that has increased because of all of this volatility and the very high prices that we've seen.
So, if I understand it correctly, 2022 created let's say, a new momentum for renewables and PPAs due to, say, unsustainable high power prices after the Russia invaded the Ukraine. Power prices started to come off in 2023, and the simultaneous intermittent nature of some of the renewables have created some problems in terms of the need to go back to the market and buy that power that was contractualized in the original PPAs. Is this the, let's say, the one challenge for the PPA market, or there are more challenges that are still, let's say, needed to be addressed to make it like a booming market for the coming years?
There are a lot of opportunities in the PPA market to achieve further scale and success. We are seeing a significant influx of mid and small size corporates that are looking to join the PPA journey, to execute these PPAs as part of their CSR or ESG efforts. As an example, in Denmark, as our new energy, we recently executed what we call a multi-buyer PPA, where we have 4 off-takers for a single solar site. That's what we call a multi-buyer PPA. So somehow trying to open up the PPA space for smaller corporates than who has historically executed PPAs, right? So because when you sort of look back in the Nordics as an example, it was the big aluminium companies, it was the big paper companies, like the huge industrial consumers of electricity that entered PPAs. Then the data centers came along, also very big energy consumers with a professional energy procurement department and abilities to sort of assess and contractualize all of this risk. And that's great. That's the first wave, and we need more of that. But to reach further scale, there lies a very significant opportunity in enabling small and medium-sized corporates to enter the market, execute PPAs at scale. And there remain some challenges to be solved, of course, around credit, around transaction costs. But I feel that I see in the market, and I feel that we have also, as our new energy, are contributing to that journey and sort of somehow standardizing and working in different ways with this new segment of corporates that are really wanting to enter the market but struggling in understanding the market and its risk.
Yeah, that's very interesting. Let's see. I think that there is an element which is definitely there, which is the need to accelerate the development of renewables, and PPAs are a great tool for that, especially because they give the liberty and freedom to a lot of different players to find their own ways to deploy renewables. And I'm really curious to see how this market will develop alongside the existing power market, and how they will mutually coexist into the future. Any thought on that?
Yes, I mean, I think it's from our side, it's clear that there is too little risk appetite in the market. When we see the build out that is needed to decarbonize, it's clear to us that there's too little risk appetite among the existing players in the market, and particularly I'm talking about capture rate risk. Right, we've seen the problems that the baseload PPAs have caused for wind in the Nordics. At the moment, we're seeing capture rates for onshore wind in Finland around 50%. so that the value of wind power is only worth half of what the baseload price is these months. Of course, that creates a big problem for the investors and for the off-takers and for the corporates, because how will this evolve over the next 10, 15, 20 years? This is the term called cannibalization risk. So we clearly see that one of the biggest obstacles of a further decarbonization and further penetration of renewables is the risk appetite on capture rates. We expect to see and we need to see new entrants into this market. I mentioned before that we hope to see, and we're working on enabling many more small and medium-sized corporates to enter the market, to act as a new risk off-taker in this segment. I think it's also clear from the electricity market reform discussions that probably in some markets we'll see more CFD contracts with the governmental entities, thereby also shifting some of this capture rate risk to the governments. Yeah? But still, we see more risk takers are needed. Is that then and we have an idea around and believe that we're going to see more dedicated vehicles to absorb capture rate risk. So not classical utilities or traders, not corporate off-takers, not governments, but maybe more dedicated funds that simply go in and try to build at scale risk harbors for capture rate risk.
Yeah, it's all so fascinating at the same time. It's like intertwined. It's just exciting to see and to wait how that develops. It all indicates, and I'm biased on that, there is a need for more analytics as well. But that's another story. Well, thanks a lot, Mikkel. It's been a pleasure for us to having you on, and thanks for shedding a light on this fascinating new segment of the market. I wish you good luck with your mission. I think that what you're doing is incredibly valuable, and yeah, hope to see you again.
Thank you, Matteo. See you again.
Bye.